Good morning to Your Excellencies, Ministers, distinguished guests, ladies and gentlemen. I trust all of you enjoyed the earlier panel, which I did. And it actually set a very high bar and a very good platform for our panel. However, as you know, our session is supposed to start at 10:55. We are now looking at 11:10. And after us is a very important person, Minister Vivian, and he has a hard stop for another event. So we will have to finish our session by 10:55. And because of that, like Professor Chan earlier, I must apologize for not being able to give you time to ask questions, even though our intention is for you to do so. As we have a very esteemed panel, I think we'll benefit a lot from their insight as well as exchange on this topic. As mentioned by DPM Gan earlier in his speech, China-ASEAN economic and trade relations have grown significantly over the past 2 decades, making our region one of the most dynamic economic regions globally. When China-ASEAN Free Trade Area, CAFTA, was launched in 2010, it was the largest free trade area amongst developing countries at that time. It significantly reduced tariffs on over 90% of traded goods. 10 years later, RCEP was signed in 2020. And you also heard from DPM Gan that it's the world's largest free trade agreement covering 1/3 of global population. It aims to simplify rules of origin, reduces tariffs further, and harmonize trading standards. All these augur well for a more prosperous and integrated Asia-Pacific region. However, President Trump's Liberation Day has thrown a curveball and introduced considerable uncertainty and disruption for supply chain and global trade. What are the implications for China and ASEAN? How might global trade, supply chain, and sustainability efforts be affected? And we heard from the earlier panel that even if US and China were to reach an agreement, which the panelists think they all would, we may not get, we just get some temporary relief from tariffs, but fundamental differences will still exist. More importantly for all of you, as business leaders, government officers, and corporate advisors, how do we adapt our strategies to remain resilient and competitive in this changing and unpredictable environment? It is therefore very timely that we are organizing this panel, bringing together business leaders and policy experts to make sense of this rapidly evolving situation. Let me start first by inviting Tommy from OCBC to share with us his observations on the shifting dynamics of trade and investment across the region as a result of the recent developments.
Thanks, Mr. Chia, for the question. Very good morning. Maybe I try to offer 2 perspectives on this particular topic. Let me start from some of the data, right? So, as you know, for China, we have 2 back-to-back slowdown for months of July and August. However, if you look at the street, not many analysts is in rush to change the forecast for China for this year. One of the key reasons is because the China's trade growth is still very strong for this year, even though we have a lot of trade tariff, etc. Right? So if you look at the data year to date, in the first 8 months, the China's goods trade surplus is almost $800 billion. That's massive, right? So one of the key drivers behind that was China's trade with ASEAN. You look at the month of August, the China's export to ASEAN grew by more than 22%. That's very, very strong, despite all the tariff concerns, etc. Right? So I think one of my own assumptions right now is, seems like we are seeing very interesting connection between China and ASEAN in terms of the supply chain. I mean, partially also in terms of the manufacturing model, for example, we are seeing some kind of we call the core peripheral kind of the model. So China is still producing a lot of core products, but they are moving a lot of intermediate goods to the region for the final assembly, etc. So that model seems to work quite well. So we are seeing the increasing intra-regional trade more than ever, right? So I want to share two data, right? So the first data is, you look at the China's trade surplus with ASEAN 6 in terms of the electrical equipment and the machinery, right? So ASEAN 6, including Singapore, Malaysia, Indonesia, Thailand, Philippines, and Vietnam, the 6 most vibrant economies in ASEAN. You know, for this particular item, before 2018, China actually is running the deficit with ASEAN 6. In other words, China import more machinery and electrical equipment from ASEAN 6 before 2018. However, after 2018, we start to see the flip from the deficit to the surplus. So it's why 2018? Because 2018 is a turning point for the global economy, because that's the first year for the start of the trade war between the US and China. So ever since the start of the trade war, we start to see this particular items is flipping from the deficit to the surplus. Guess what? For the past 2 years, this surplus is really ballooning, right? So you know, last year for this particular item, the China is running 63 billion US dollar, the surplus with ASEAN 6 for the machine and the electrical equipment. So that's a massive number, right? So this tells us we are seeing very close, interesting supply chain linkage between China and ASEAN. So the supply chain become increasingly more and more intertwined. Not only for this machine and electrical equipment, even if we look at the vehicles, transportation, we are seeing very similar trend. You know, last year in 2024, China is running about almost 30 billion US dollar surplus with ASEAN 6. If we add those two items together, it's almost 100 billion US dollar. That's a massive number. So that's the first angle I want to share in terms of the data, what we are seeing. That's why my view is, I think it's very difficult for the US to break down this linkage between China and ASEAN with the tariff. I mean, that's my first perspective. I just want to add on the second perspective is in terms of history perspective. I want to share with you maybe two stories, right? So let me start from my first story. Let's go back to the 13th century, right? So we know in 13th century, in the world, we have a very powerful country called the Mongol Empire, right? So one of the interesting timeline is in 1259. In 1259, the king, which is the emperor, the Mongol Khan, died, right? So then in 1260, Kublai Khan claimed the title, claimed the throne, right? But I mean, for a lot of Chinese people, Kublai Khan is a very important person because he's the one founding we call the Yuan dynasty. I mean, from the Mongol Empire perspective, it's a bit interesting because his rising means the division of the Mongol Empire because he tried to claim the title, but his brother and his cousins didn't agree. So therefore, from the 1260, we see the division of the Mongol Empire. So why we talk about the Mongol Empire division? Because for ASEAN, we actually benefit from the division of the Mongol Empire in 1260. Why? Because we know previously how we do the trade between China and the Middle East. We do the trade via we call the Silk Road, right? It's mainly through the Central Asia to the Middle East, right? But because of the division of the Mongol Empire, because of the civil war, the war within the Mongol Empire, right, between the different countries, so the traditional trade route has been blocked. So we have to go for the alternative. So what's the alternative? Which is the maritime Silk Road. When you go by the sea, that's how ASEAN start to benefit from the trade, right? So if you go to National Museum of Singapore, right, the story of Singapore starts from 1299. We call the Kingdom of Singapore, right? So why is 1299? It's because of the Mongol, because of the Yuan dynasty, because of the maritime trade between the China and the Middle East, etc. Right? So I mean, on the side note, I do encourage everybody to visit the National Museum because the history gallery of the National Museum will be closed from late November for 1 year because of the renovation. So don't miss it, right? So for me, every time I go there, I always can find some perspective, help me to understand the change of the shift of the geopolitics, as well as how to navigate the changes. I mean, that's my first story. The second story is...
Sorry, Tommy, I need to cut you off for the first story. We'll come back to the second story if we have time.
So if you don't mind, I just quickly summarize, right? The reason I want to mention that because the thing is, we are seeing the breakdown of the traditional trade rule, right? So, but we know the trade is like water. If you got breakdown of the traditional trade rule, people are looking for the alternative. So now we are seeing the same. You know, the Trump's policy is like they try to block the trade rule, right? The traditional trade rule. So people are looking for the alternative. That's why what I believe is, I think the ASEAN may potentially benefit from these changes if history is a guide. Sorry to...
No, thank you, Tommy. I think we all know that sometimes we need to learn from history in order to predict what the future may be. And I think Tommy mentioned that ASEAN-China trade has grown, right? And it's good for ASEAN because we have all these cheap Chinese goods that are bound for US coming here now. I think for now it's still complementary because those goods coming down are not things that Southeast Asia countries produce. So it's complementary. I think the question remains, if Chinese companies come and flood Global South with products that Southeast Asia companies produce, then what that reaction could be, right? Hold it there, and we'll try to get the insights from other panelists as well. And I would like to move quickly to Clark. Clark, as you know, Clark is from the other side of the so-called civilization, if I may use that word from the earlier panel. And maybe Clark can help us make sense of what is the recent US trade policy and how this may impact on China and ASEAN trade. Yeah.
Thanks, Kim Huat, and thanks to Business China. Yes, so to respond to that, I am American. I live in rising, growing, dynamic Asia here in Singapore, and I worked in government on trade and investment policy and do to this day. So there's the adage of, may you live in interesting times. I feel I am blessed in that realm. Fascinating discussion on the civilization point in the earlier panel and whether we're at a civilizational reset. I won't attempt to answer that here, but I think as business leaders, we have to start with an acknowledgement that this is an era of cyclical change. We are in structural change. This is not a passing fade. We can debate on whether we're going to quote unquote go back to the old order. I don't think we should. I think we need to acknowledge that and figure out the new rules and the new language of trade. So let's talk about that and what the impact is here in Asia. It's personal to me. I spent time in the White House during the Obama administration. I worked on the Trans-Pacific Partnership, which is now CPTPP. We heard DPM Gone talk about that. So when President Trump was elected, it truly felt that we were closing a door in some sense on the United States approach to trade, and most certainly in our engagement with Asia. But I think it's important to note that this is not a partisan issue. Joe Biden, during his term, did a lot in industrial policy at home, but I would not say that he pursued a particularly robust trade agenda. There were certainly pro-trade Democrats in Washington that were frustrated by his approach. So that's point number one, that again, this is not a passing fade. This is not a partisan matter in the U.S. This will continue. I am extraordinarily concerned about what I see as U.S. disengagement on trade and in Asia economic policy. But it's not simply as a unilateral actor. It's not just because the U.S. is taking this stance. Instead, it's because I think we are doing this at a time of significant converging factors in the global economy that we are still grappling with. Number one, foremost, is the rapid acceleration of data-driven, of digitally intensive services. Most predominantly, of course, AI, as we all talk about, but there's a broad range of industries that are data-driven, and these services spread much faster. I've said in other forums, it's much easier to send an algorithm across the border than it is an agricultural product. That intensification is going to continue, and it has implications. Secondly, the reshaping of the regional trade architecture and agreements. DPM Gong mentioned RCEP, CPTPP. We have ASEAN-China concluding negotiations and the FITP partnership. You would be amazed how many Fortune 100 companies in America and elsewhere have not truly taken the time to do a deep, deep dive in understanding their value chains, looking at where their sources come from, where they can site production and manufacturing, and what the best export markets are based on this web of trade agreements and where you can get preferential access. And there's no excuse for business leaders and corporates in this room to not do that exercise anymore. And then third, I would say just the shifting global power dynamics that was discussed in the first panel, but export markets, and particularly in ASEAN and Southeast Asia, are going to expect more from investors. It is not simply how do you sell into the market, but how do you partner in these markets to increase national competitiveness and to be a true partner in the markets that you're serving. That has implications, that changes business strategy, business approaches, and we all need to have a long think about that impact and how we're conducting business amid these new rules, new language for trade.
So thanks, Clark, for that sharing. Maybe just a quick question. We all heard that President Trump has a fairly successful visit to the UK, bringing 175 billion worth of investment. You think he would come to Southeast Asia with that sort of suitcase?
I would love to see, well, first of all, as a positive point, let's remember the United States is the leading FDI investor, certainly in Singapore, I believe in some other ASEAN countries. I would love to see more of that. I'll be candid, I think China is in the headlights first and foremost. So there's a question, obviously, of whether President Trump will participate in the ASEAN summit, for example, whether he may meet President Xi on the sidelines of APEC in Korea. We'll see about that. I think they first want to address the U.S.-China relationship. You saw we're going to have a call today. There'll be TikTok in the news. I'm looking to see what the details are of that agreement and whether that opens up space for the negotiators to really get somewhere. But I think that's going to be first. So we'll see what comes.
Thank you. I think we all know actually why I asked the question, because while China is the largest trading partner for many Southeast Asian nations, including Singapore, as you heard from DPM Gan since 2013. But the largest investor in Southeast Asia, Singapore, is still US. And the question is, how would that change the dynamics between trade and investments? With that, maybe let me move over to Mr. Wang from Bank of China. As we all know, Bank of China is a global bank with significant interest in the region and has been helping Chinese venturing out to Southeast Asia. Can I maybe invite Mr. Wang to share with us his observations of Chinese companies venturing out to Southeast Asia and what potential does RCEP hold, right, for deepening the regional ties?
Okay. Thank you for the question, Mr. Xie. It's my great honor to be here, share some views from a Chinese bank's perspective. I'm based in Hong Kong. I'm the DCE of BOC Hong Kong, looking after the corporate finance and markets. So my daily job is, serve our Chinese companies who are going out, especially in the ASEAN region. As we all know, over the past decade, China-ASEAN, trade investment achieved a remarkable development. I don't need to elaborate too much data, as I think Tommy or, Moderator already mentioned a lot. But in front of the new uncertainty and the challenges, especially the global tariff tension initiated by US, why this kind of very strong trend, between China and ASEAN's trade and investment can continue is a big question for all of us. So recently, actually, myself and my colleague have very close communication with our corporate clients in China who have already all willing to will invest in ASEAN. And we get very useful and valuable observation here. I just want to give you the results we collect from our customer. The first one is that Chinese company still remain quite strong confidence for investing in ASEAN, even there's a lot of uncertainties or challenges. Most of our customers still very optimistic about ASEAN market. For certain regions, just now, the moderator mentioned, RCEP implementation, the upcoming new version China-ASEAN free trade agreement, and also the continuous progress of Belt and Road Initiative, etc. The second point is in front of the challenge and uncertainties, Chinese company invest in ASEAN definitely will evolve or upgrade. So there's two dimensions of upgrading. The first dimension is that, in the past decade, maybe the main driver is the re-export, through ASEAN countries. That means the model is supply the country market through assembling in ASEAN. But in the coming years, our corporate clients mentioned they will upgrade to, supply the country market through production in ASEAN. So only one word difference means a lot. That means, Chinese company will transfer more their supply chain to ASEAN rather than just the final step of the assembling. So that's a big difference. The other, upgrading is apart from, emphasize supply the country market, Chinese company also emphasize to meet the local market demand. They want to explore the local market. So as we know, ASEAN have almost 700 million population. It's a big market, and also most ASEAN countries in the process for urbanization, and there will be an increasing number of middle-class people. So this is a big market. The last, observation is that the sector, Chinese company invest in ASEAN will be majority diversified. I think last panel, one of the panelists mentioned, I think very meaningful point is in the past, maybe the majority of the investment relate to the infrastructure or labor-intensive manufacturing or maybe resource-oriented investment. But in the coming years, technology-related investment will be a very important sector, and also e-commerce or renewable energies, and also financial services, etc. That's my answer.
Thank you, Mr. Wang. We're glad to hear that. China is catching up on its investments in ASEAN. They are bringing their factories, plants into Southeast Asia. I think that's good. I think we all know that China is very strong in digital technology as well as in the green sector. And we also know that when businessmen want to bring their monies out of China to invest, it's subject to regulatory controls. So from your point of view, do you see the easing up of controls such that they allow more Chinese companies to invest, including downstream transfer of technology to Southeast Asia through investments?
Yes, I think the trend is very obvious. Based on our communication with Chinese companies, especially the sectors like the technology or renewable energy, I think they all show very keen willingness to transform the whole supply chain to ASEAN. I think this will be very valuable for ASEAN country to upgrade their innovation, stimulate their local innovation, and also boost their employment, and also transformation from a very old business model to more advanced, more environment friendly business model.
Thank you. Okay, we now move to the businessman. We know the businessmen from the previous panel always have a different perspective, an interesting perspective. And I'm very pleased to then move on to Kun Vikram, who is the chairman of Amata Group, obviously who has been dealing a lot with Chinese companies, not just in Thailand, but in the region. Can I maybe invite Kun Vikram to share his insight on how can Southeast Asia companies like yourself, in a sense, collaborate with Chinese firms as they venture into Global South?
Okay. 上午好，大家好，我是泰国人，是第四代的华裔了。Well, I think our customer they speak more English, so we should be change the channel to the English. Well, I'm Vikram from Thailand. Well, I'm fourth generation of the Thai. In fact, I coming here, my main business, I'm the bookseller. I'm not good for whatever the money, all the people here, they always know the money. I don't know much money. I know only selling the book. Well, I'd like to tell you a few minutes about my experience. My experience, I have been, working with the Chinese, the manufacturer. We do have about 400 Chinese factory in my industrial park. I have over 750 of the Japanese, manufacturing in my park. So for the last over 25 years, we do have experience with those, Unbelievable, the Chinese investment is growing, especially the last 2 years. In the old days, the Japanese is a big player, but today, I see all is active of the Chinese. And many of them are now going into the high tech. Some of my customers, they are the huge of the GDP or R&D, the budget. So I really feel the future of the Chinese investment in our region, it will be really active. How we can be corporate with those Chinese investors. I think why we are so successful in our park, I would say that Japanese over 700 factory, they are 100% success. Chinese at the moment over 98% are success. Next year, I believe it will be about 100% success. And how to make them success? The Chinese don't speak English so much. And the Chinese is really a newcomer. They don't know how to do, on the legal or management with the local. That is one of the point. How I do success with them. I do the call all service center. Whatever they do need, for the government license, I have 100% of the government license for them. What do they need for the utility? I have all the utilities for them. That's why they're working in the factory. That is the job. And outside of factory is my job. That is the way, how to manage and working with those Chinese. And they are so happy. I don't know what they are drinking. Maybe they're drinking the Red Bull energy drink. They're working so hard, my God. I thought that Singapore already, the Singaporean, maybe you take Red Bull with ginseng, right?
Yeah.
Yeah. But Chinese take the Red Bull with the, Mao Tai.
Are you sure that's a good mix?
Well, I don't know why they are working so fast. Unbelievable fast. And they make a lot of money and very fast. I would say that is one of the very good of the Chinese advantage. Number one, they work hard. Number two, they always doing the R&D. My customer, like Huawei, Haixin, and media, they always have the R&D people, over 100,000 people. I don't know how they can do it. So it means, I would like to say to everyone, the future of the investment in ASEAN, I think will be the majority is the Chinese. And I do hope the Western, American, Europe, or Japan should become working together with the Chinese. I would like to offer in my park today I have about 500 square kilometers. And by the end of this year, I will have 700 square kilometers. This is the home for all the Chinese, all the people that I would like to work with them, and I'm happy. I speak Chinese a little bit, and I believe that I can be communicate. You have to start to learn Chinese and speak Chinese to working with all the people from China.
Thank you, Khun Vikram, for your perspective. I think what you brought out reminds me of a word in China often used. It's the word called "juan." Why they are so hardworking? Because China is a large country with lots of talented people, and you have to work harder than the next guy in order to get ahead. I don't know if you have heard of this number, not 4D, 3 number. 996. 996 means you work 9 to 9, 6 days a week. But I was told these days that's not sufficient. Now it's James Bond's era. 007. You have to work 12 to 12, 7 days a week in order to get a job. So that's why it's competitive. But I think what you mentioned is also useful because as China developed its external wing, become a MNC, it has to learn the international culture, international trade. And that's why you say there's still maybe 2% in OPAC that's not so successful. With that, let me come over to Mr. Chen. Mr. Chen is from JPM. I think we all know that for trade, currency is important, and we heard from the earlier panel, although they didn't have much time to elaborate, neither do we, about the dollarization issue and whether will future trade be settled in stable coins, which is a very new development. Perhaps I can first get Mr. Chen to share with us his insights on Chinese investment in Southeast Asia and whether there's really any push for dollar dollarization in this region.
Great, thank you. Thanks for having me. So at JPM, I think we have the privilege of working with large companies, MNCs, Chinese companies, entrepreneurs directly. So we do get to see kind of what they're doing, how they're thinking about those investments. And I think we'll start off with like Chinese investments into ASEAN. And on that point, I think an interesting takeaway is that we talked a lot about supply chains and manufacturing. An interesting other angle to it is, I think, in the digital space, where Chinese companies are now very competitive in software, in content, in entertainment. If you think about video games, think about what your kids are playing, they're spending money and paying a Chinese company to play the game. Okay, like those are the most popular ones. They're spending money watching Chinese content. So beyond just kind of like manufacturing and supply chains, content and entertainment, I think that's another digital space that China has become very competitive. And to that earlier point about juan or 内卷, like China is very good at exporting that in the form of more competitive kind of goods, services all around the world actually, and especially in Southeast Asia. So one kind of pushback, and it was mentioned at the earlier panel, if you have a flood of cheap Chinese products and cheap Chinese services, that could crowd out, or compete with local producers, and that could be a social or political problem somewhere down the road. So you're seeing some pushback, some thinking around restrictions around textiles in Indonesia, some tariffs implemented by India against some Chinese products, and even in Mexico. So there is a bit of a balancing act for Southeast Asia. On one hand, the FDI is very welcomed. It creates jobs, it helps the economy. On the other hand, if that means very cheap and competitive goods and services, which hurt the local economy, just like it hurt the US for these many years, then they've seen the lessons, they don't want that to happen. So it's a bit of a balancing act about setting conditions to benefit from the investments, but also not crowding out the local producers. And another aspect to that is also very interesting about the investments. It's China kind of has to do this. If you think about the key driver of Chinese growth, it has been exports. It just keeps going back to exports. It's difficult for China to rely on other avenues of growth at the moment. So exports is key, and exporting to other markets is key. Now, even if we get a trade deal between China and the US, right, like that deal still means that tariff rates are going up today versus any time in the last 100 years. So the barriers to trade are up. And even if we get a deal, Chinese exporters would still look for alternative markets. They cannot just rely on the US. So I think this pressure of exports, of competition, of exporting the juan will kind of always be there, at least for the next several years. Now, on the point about the dollar, very quickly, I think I'll just get a show of hands in a room. Who thinks the dollar will keep depreciating over the next year?
Dollar depreciation.
Yeah, the dollar will keep losing value over the next year.
Against which currency, if I may ask?
Against every currency. Just in general, the dollar keep weakening. I think see a fair show of hands. Well, I think that, yeah, that's a lot of people. I think it's priced in. Right? I think that is a signal that, for us, there's a lot of fear around, getting out of the dollar, diversifying out of the dollar. The dollar is down about 10% this year versus most currencies, right? So I think a lot of the fear of that uncertainty around President Trump and the policies and all that impact has been priced into the dollar. Will we see another few percentage points down? I think it's possible. U.S. interest rates are coming down. U.S. growth is slowing down. It's only natural cyclically that the dollar weakens. But to suggest that we will see a quick move away from the dollar in capital markets, in global trade, within the next kind of 1 to 2 years, I think that is a bit of a stretch. I think it's more of a conversation. A lot of clients and investors are talking about dollar diversification. It's a lot of talk, but not a lot of action. If you look at fund flows, it's still a net inflow of foreign assets into the US. So a weaker dollar is good for emerging markets, ASEAN included. ASEAN can benefit from that, lower funding costs, and easier financial conditions. But I wouldn't say it's a collapse of the dollar or a quick move away from the dollar. That's not our view.
But when we say move away from dollar, it may not just be the traditional dollar sense, because we heard from the earlier panel that US has enacted 3 pieces of legislation which were then pushed forward with the US stablecoin, which seems to be the preferred currency of state settlement in Global South. Any views on the stablecoins?
Right, so on that, it just acts as another source of interest and demand for the dollar, right? Stable coins, at least dollar-denominated ones, it's a one-for-one backed by a US dollar. So that actually is a way for the US to maintain or even increase usage of the dollar, which can, reverse some of this move out. Again, we're not saying that there are no moves by the Global South or China and Russia and the Middle East to move away from the dollar, but so far the dollar still remains the most liquid, the cheapest, and the most efficient way to conduct trade and, more importantly, capital markets activity between third parties. Like third parties not involving the US, they still prefer to use the dollar just for those advantages. So I don't think, even with stable coins, that still is not a net negative for the dollar, not necessarily.
I see. So since we have 2 other bankers on this panel, can I invite you to share your insights, any different insights from what we heard with Mr. Chen?
It's very, stablecoin is a quite hot topic recently. Everyone is clear. I think the last panel also have a discussion. I think the strong supporter for stablecoin is whether it can play a critical role to facilitate the global trade and investment. That's a question mark, actually. So far, the most successful story for stablecoins, USDT, USTC, but they mainly settle for crypto assets rather than the real international trade. So I think in front of us, there are 2 big issues should be tackled. Firstly, how the stablecoin, to settle the international trade, can meet standard for global compliance. That's the first issue. The second one is the real use case have a big scale for global trade. I think, as I mentioned, so far still mainly used to be settled for crypto rather than the trade. But what's the use case? I think is all the regulator or market players, all concerned about.
Well, I think after US launched their Genius Act, Japan and Hong Kong quickly followed. I believe there's some interest in this space. It's just probably a question of time before things catch up. Tommy, any views on this?
Yeah, I mean, in terms of stablecoin, yes, I think it's quite interesting. I'm also learning as well. But I guess there's 2 questions we need to answer, right? In order to go ahead. I mean, the first question is in terms of the use case of the stablecoin, as mentioned by Mr. Wang. I mean, the second question is also in terms of is there any viable business model for the issuers, right? Because right now we know for the issuers, the big chunk of their revenue came from the spread, right? You don't pay anything to your liability, but you earn quite a lot from your reserve, your investment in treasury, etc., right? So now we know the Fed is cutting the interest rate, so the interest rate is going down. So then the spread is tightening, right? So how's the viable business model for the issue? I think this is something probably we need to discuss as well. I mean, also in terms of the risk, I guess the fragmentation is one of the potential risks because the coin could be on a different chain. You know, the different chain may not talk to each other. Then how to make sure the chain to talk to each other? I think there was a lot of things we need to think about that if we continue this particular project. Thank you.
Thanks. I suppose this is still a developing area. It's definitely a space to watch. I think we are running out of time, but I just want, before we close the panel, to touch on a couple more issues. First one, I think since we're in Southeast Asia, we want to know what role Singapore, especially Southeast Asia, can play in this realignment of supply chain between US and China. What I'm seeing on the ground is that a lot of Chinese companies now are setting up presence in Southeast Asia. But the Southeast Asia factories are not products meant for Southeast Asia. Their Southeast Asia factories, because of rules of origin, are products meant for US. And Southeast Asia, because they are here, they have demand for their products, their needs are satisfied from China. So China products sent to Southeast Asia to supply, to meet Southeast Asia demand, whereas the Southeast Asia factories go to US. So then my question is, are we able to effectively perform this role, right? It seems like the supply chains are realigning so that we are the middle ground, whereby we can then so-called help to meet the supply and demand between US and China. Clark, any thoughts on that?
I don't have a good answer or good thoughts for that, unfortunately. Based on what we were seeing out of the Trump tariff regime, and this goes right to the heart of these new 40% transshipment tariffs, which they have threatened. The bottom line is that's extraordinarily complex exercise to try and analyze and enforce. And I don't know that Customs and Border Patrol knows how to do that. I don't think companies are fully yet compliant in figuring out how they're going to manage their value chains to do that. And the bottom line is it's injecting an extraordinary amount of uncertainty into businesses trying to figure this out. This just goes to my point earlier. There is no excuse anymore to not know your value chains at a deeply dynamic, granular level, because this new language of trade with export controls, with investment screening, and with transshipment tariffs coming online, it's creating a new paradigm. And Kim Huat, I don't know yet where we go. I don't think anyone does, but it's something we have to be cognizant of and be ready to adjust our businesses around.
Thank you. While you hold the mic to close off this panel, I just want to ask a question to each panelist. Companies that rely on international trade, and there are quite a number of them here, what would be your advice to them on scenario planning? Knowing that US-China will probably reach an agreement, there'll be some temporary reliefs on tariffs. Are they supposed to change their supply chain fundamentally, or what should they do from your perspective? Maybe I'll start with Clark.
I have multiple ones, but for time, I'll give one. Put geopolitical acumen into the C-suite. Full stop. Major multinationals, of course, have large government affairs and public policy functions. Some even have internal think tanks. But no matter what size of your business, there's no excuse to not have at least an advisor to the C-suite, or think about a board seat for someone who has been at the table, so to speak, for policymaking and can help you navigate these currents.
So, ask the expert. Clark is definitely one of them. Can I move to Mr. Chen?
We are doing that in JPM. We are building up a lot of geopolitical advisory for our own business and also for our clients. I would say if there's one thing to do is to keep in mind that a lot of these things move more quickly than you imagine, right? So it pays to be prepared for the worst and be a bit more active in preparing for these shifts and thinking about kind of the worst case scenario. I think the worst case scenario probability is higher today than I would say the past many decades.
So ask your bankers, they could also help you. And what he's saying is, 计划赶不上变化. So before you decide what to do, things change again. That maybe sometimes that means do nothing. Mr. Wang, what would you advise for the people who deal with international trade in terms of their supply chain planning?
I think, as I mentioned in my first, talking, is be optimistic and confident. I think, just as mentioned by Ms. Chen, everything is changing very fast. So what we can do is just well prepare yourself and also be optimistic.
Yeah. 以不变应万变. Tommy.
I guess diversification is still the key words, but also I think learn from the history. We should revisit the history and what we can learn really from the history.
Okay, diversification. And we're going to finish off with the businessman. Kun Vikram, what's your advice? What are you doing?
Well, I think we are very lucky. We are in ASEAN. I still believe the future of ASEAN will be the hub of the manufacturing, economic. I really would like to believe that I would asking everyone just looking for the future with China, for even the Western, and going to do, I believe that our GDP will be growing over 5-6% continuously. So please trust ASEAN and going together with ASEAN.
Thank you for making such a strong speech for ASEAN. With that, I would like to close this panel, and may you join me to thank the panelists for their insights.
A big hand for Mr. Chia and